Welcome back to part 2 of our interview with Phil Blows. Let's get to the interview. So picking up on that last point, it's fascinating because what's happening now is individuals are piling in with new forms of cryptocurrency because they smell blood in the water. So the more that happens, the more you're going to get these wild peaks, and the more it destabilizes the very foundational cryptocurrency that you're talking about. I mean, surely the more discredited a sector is, the less well perceived, an investment would be. I mean, are you seeing that? Like when you talk to people, what's their reaction to all of the stuff happening in the market versus the way that you're explaining to people your system works?
I think the big difference between that's happened over the last few years is the attention of regulators around the world. So for this, it gets a lot of pushback, but we are firm believers that for cryptocurrency to get to where we want it to, which is it to be 5-10% of the average diversified portfolio, the average investor's portfolio, it's got to be regulated. Institutional adoption is never going to happen until it's regulated. And we're starting to see regulators come into the space, and typically they're requiring firms to register, which isn't as much as full regulation, but they're putting a lot of, those registrations are pretty arduous and pretty, with a lot of detail. So it's understanding who owns the businesses, what their kind of know your customer and anti-money laundering procedures are, and really making sure that there is investor protections in place, that investors are being warned about the risks of crypto, which rewind 3 years ago, even 1 year ago, wasn't happening enough and still isn't happening for a lot of people. So it's beginning to get policed more and more, and it's becoming professionalized as a business, and that needs to happen as fast as possible to protect consumers, but also just to give the industry more credibility. That being said, I would say that the quality of the projects, the new projects that are being released, as the crypto community itself has become a lot more savvy, the quality of these projects is increasing. So we had this kind of what's called ICO, which is an initial coin offering, a boom around 2017, where people were raising $50 million in 24 hours with a PowerPoint presentation and nothing, and then running off with the money. It's just full of scams. And people know that just doesn't happen now because people are a lot smarter. You're seeing if people are launching coins, they're doing it having built a business already that's attracted an audience, that has attracted users and assets and those sorts of things. So I think the bar to entry to be taken seriously by those who look at crypto has gone up a lot. But it's dangerous for the uninitiated coming in. So I'm always being asked by people I know, what do you think of this coin that obviously has just gone up 10x and 10 times in the last 24 hours? And, I can see no real reason why it would do that or sustain it. And they've just heard of it from a friend of a friend, and they're generally the person who goes in right at the end and is the exit sort of liquidity for people who were at the start of the rumor that pumped it up there. So,
do you know what? Sorry, Phil. I was going to say, do you know what I find absolutely fascinating about the investment world is that for all of its sophistication, for all of its complexity, for all of its significance within most societies, the reality is that the value of something lives or dies on opinion. They live or die on whether people believe. On 9/11, if you owned airline stock, you were screwed, and you were screwed for the next 6 months. But if you bought in that time, you rode a wave afterwards. Like the very idea that, the weather can change the perception of whether you should be in a stock or out of a stock is incredible. And I think it strikes me it must be difficult to try and weather that when you're in the most kind of the most bizarre part of the market right now, which is, as I said, this Wild West. It must be difficult to manage.
Yeah, I think, I mean, you see it in traditional finance as well. And everyone loves quoting Warren Buffett. He's sort of be fearful when others are greedy. And greedy when others are fearful. It's the market's generally always wrong. But by his sort of same lessons, the way to look at any, as long as it's look for sound, solid investments and hold for the long term. Yeah, it's the short term noise that is the distraction. Yeah, so you've got to just ignore it. So if I will look at something like, I hold a basket of stable coins that yield me 12% and a basket of Ethereum and Bitcoin that yield me 7% and obviously have a lot of fluctuations in the underlying. But the way I get around all that noise is just to systematize the whole thing. I put a portion of my money in, every month into these products. And some months I'm paying a lot for them, and other months I'm paying very little for them because the market's come off. But if I step back and look at it over 5-10 years, as I say, crypto's been the best performing asset class. But I guarantee you there's a lot of people who've lost money in it because they've been trying to time the market. They've been greedy when they shouldn't have been, and they've been fearful when they shouldn't have been. But had you just sat there and done nothing and had confidence that the market is what it is, and earn interest over that long period of time, crucially, because that over a 5-year time period, that 7% interest will give you considerable upside over just having it sitting in a wallet somewhere. You've done really, really well. It's the same in stocks. You hear these horror stories of people who've used leverage and tried to time, just stuff on some of the real retail focused trading platforms, and they've just blown themselves up in 24 hours. They've been millionaires one day, and 24 hours later they're owing the brokerage money. The same people, had they sat in an index tracking fund, would have averaged like 20% a year for the last 5 years, and done exceptionally well. It's it's the same.
It seems with sorry, please, Phil, go ahead.
Saying it's the same behavior in both markets, and that's the behavior you need to avoid.
It seems like you're younger than I am, from what my perspective, but you're old enough to possibly see some of the same things. We seem to live in an age of immediate returns, of instant gratification. And I'm wondering if cryptocurrency is a response to that. And that's somewhat of a rhetorical question. But I'm going to ask, if you were to go back to that younger guy that was studying geology, that was reading finance, what advice would you give to someone who's 20 years your junior, to the way that they should think about their finances long term and how they should prepare?
I think, this was, I don't want to plug it, but there was this very poorly written book out there that I wrote, which is trying to answer that just that same question, which is you're looking at your finances in three just ways, which is what you're spending, what you're earning, and what you're investing. And if either side of that sort of triangle is out of kilter, then long-term wealth is not going to happen. And you look at, so I would be probably encouraging myself to focus on that a lot more. And especially when it comes to, and there's certain things you can do, optimizing spending behavior. Tiny little differences make massive long-term gains. So if you can think of your phone bill, just a few dollars or pounds off your phone bill every month, if that's being saved, it equates to thousands and thousands over the course of your life. And then when it comes to investing, just making sure you're taking appropriate risk. The UK is a good example. There's something like 200 billion sitting in cash savings products that's losing 4% a year. And it's just because those people don't understand that they should be taking more risk with this long-term cash, probably. And so getting people to invest at the right risk level is really important, doing that as soon as possible. And I think really interesting, and it's probably I looked at lots of different ways of making money outside of work before I started AQRU with my co-founder, and I would have said don't do that. But I would have made more money had I just focused on the day job. And I learned a bit through those startups and about but nothing that a few things that probably helped us on this side of starting AQRU. But the big
Can you explain that? That's really interesting. Explain what you mean by that.
So there's this big there's a lot of content out there. Hustle, get a side hustle, all these sorts of things. You should be working 20 hours a day doing that. Before you would ever do that, this would be the advice I'd give to sort of myself there. Before you start diverting your attention to something else, look at what you're doing now. So I spent a big chunk of my career in sales, for example. So are you the top earning salesperson in your company? It's like, if you're not, you're doing something wrong at work. And the lowest hanging fruit, the easiest way for you to increase your earnings is not to go and focus on something else. It's to become the highest earning salesperson in what you're doing now. And that could obviously be, in any, look at a variety of different careers. Are you the best person at the job that you're doing in your company? And, in which case, if you are, go and ask for a pay rise. That'll probably give you the same as an easy side hustle would. Only look at a side hustle if you are the highest performing person in your company, and you are, you've done it. There's no real room to increase easily, but you can see quite an easy opportunity elsewhere. And that I think growing up, I was very much focused on always looking for the next thing. And that's probably part of why and now for the first time in my career, having started a business, I'm never going to look elsewhere. I'm 100%. And I think maybe that just shows that maybe I wasn't ever a good employee for anyone else. But I would have encouraged myself to say, look, you just focus. Focus is the biggest thing that people lack, I think. And, whether it is social media and things now pulling you all over the place, if you focus on doing just your main things in life really well, that's where I've seen the most personal growth, is when I've cut off all distractions and just focused on what's immediately in front of me. And I think that would be the biggest lesson I would be telling my younger self, is get rid of all the distractions and focus. Don't try and do a million things.
That is a phenomenal piece of advice. I was speaking to somebody last week who said that they had a friend in HR, and in this pretty large company, they'd hired somebody pretty young, pretty senior position, but they hired this person knowing that they had a major side hustle that they're also dedicating a lot of their time to.
Yeah.
And the reason that they accepted it is because they said every young person they're interviewing and hiring now, they all have these side hustles on. Mm. And I wonder, it's such an interesting point you make. Is that about money? Is it about interest? Is it about the fact that we've grown up with exposure to information and travel and food and all the other things that kind of complete complete us? Is it just created more need to be exposed to different things, or is it about money? I'm just curious about that.
Yeah, I wouldn't say it was money, because the majority of side hustles are pretty low paying stuff. And I think it's about interest. People, if you're feeling unfulfilled. But I guess it'd be interesting to understand why I could, in my own mind, why I was feeling so unfulfilled. I think, I feel more fulfilled now working for myself than I ever have before. So maybe that's what it was. But I think in my 20s, if I tried to start something significant in my 20s, I don't think I would have succeeded. Whereas a lot of the lessons I've learned, I give massive credibility, massive kudos to all those founders who did it in their 20s. I feel like I needed a good 15 years to actually be in a position to successfully, lead a business. So
yeah, you're absolutely right. And by the way, I just interviewed one of your fellow countrymen a couple of days ago, and he is he runs a business that basically helps companies secure investment. And he said one of the amazing things, he's a very, very experienced guy, and he said 30 years ago, 90% of the investment that they would raise was coming from people who had made the money through inheritance. He said today, almost 100% of the money that they invest is coming from people who are self-made.
Yeah.
I mean, that's a remarkable. So the point being is that issue of focus that you just said, if your concern is money, then, and this is what this program is about. I'm a massive believer in entrepreneurship and its potential to transform people's lives, and it comes down to that. So I think on that final comment, I will close the interview. I think it's a brilliant one. Focus. So thank you so much, Phil. I wish you the greatest luck. It sounds like you're a very, very smart guy doing something very, very smart, and I wish you all the success with your business. Thanks for spending some time with us.
Really appreciate it. Thanks, Robert.
Thanks so much for sticking to the end of our two-part interview with Phil Blows, co-founder of AQRU, a platform for generating stable returns through cryptocurrency. Phil's lesson is one of moving from a degree in one subject to a career in something entirely unrelated, and how 20 years of experience can be applied to a new market to provide a stable hand in helping consumers. I hope you enjoyed meeting Phil as much as I did. Now, I want to give a big shout out to my amazing sponsors, the Innovation Hub at Carleton University, dedicated to creating leaders and new business ventures, just like Phil's. Find out more at www.carleton.ca/innovationhub, and please remember to hit like and subscribe for more great stories of inspired entrepreneurs.